Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right, so happy Monday. We're in the December contract now. We rolled over late last week. What we're seeing overall is an attempt by the bears to turn this into a sell rallies tape. So I've told you for the past several months through all of this that what the bears need to do is convert areas, levels that matter on a closing basis, and maintain those levels as resistance for multiple days. And if we can get that, then we will get at least some form of a retracement, which everybody is so desperately, wanting for months. You got that last week. 35.87, you get the breakdown. It tries to hold here at the green line at the daily mid-band, bounces up to the 9-day. The 9-day says forget it. And then you spend the next 1, 2, 3 sessions, Wednesday, Thursday, Friday, holding resistance at the daily mid-band on the continuation chart. You get a shift down for the roll, but at the same time, that daily mid-band doesn't have a look. So on the December contract, your daily mid-band is 34.16. We're trading 33.62. Best we could do last night, 33.64. Hourly chart. So the dynamic of last week's resistance had a lot to do with the monthly pivot on Wednesday here and Thursday here. With the push down late Thursday, they were only really able to get back to daily pivot on Friday. That goes resistance and they make the lower low. So you get a little bit of a move back up late in the day, little gap up last night. Here's your new weekly pivot, 33.49, so basically 33.50. They've been over the top of that most of Globex. So as we head into today, I'm very curious on what side of that weekly pivot are we going to close. The hourly mid-band is also 33.50. You can see it here. So there's a whole heck of a lot going on at 33.50, and how we close, whether it's above or below that level, is going to have a lot to do with what kind of an early week is in store for each side. The bears need to turn that into resistance. They turned weekly pivot into resistance last week. They rejected it back on Tuesday. Then lower highs at monthly pivot. They need to do the same thing this week. The bears are not talented enough or consistent enough to be able to turn it on and turn it off. They don't get to take breaks. When they take breaks, we go up to 300 handles. So they need to keep the pressure on, and that 33.50 level is going to be the key. For the open today, you got a volume weighted average price 33.60s, proprietary moving average 61 quarters. So you got a lot going on there. So call it 50 to 60 as a chunk of price. They're probably going to fight over off the open. And whoever wins that battle has the advantage heading into the close. All right, everybody have a fantastic day. Be safe, be healthy, take care, trade them well. See you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.